Alright, for this video, we want to go through a sample Georgia Form G-7, which is a quarterly payroll withholding return. So we've got a sample G-7 here, which is just 2 pages, so pretty straightforward. We've also got the State of Georgia Department of Revenue's Employer Withholding Guide, so we'll cover a few sections in here. We've also got an Excel workbook for this fact pattern, so this is a sole shareholder, sole employee type of company. So we'll look at these numbers, and then lastly just some background on the quarterly returns, and then some more details on the fact pattern. So generally, if you are an employer based in Georgia, or you might have people working for you in Georgia, employers are generally required to withhold Georgia state income taxes on those wages, and then in certain cases also required to withhold on wages for non-residents that are performing services inside the state. Now, this withholding tax is reported on a quarterly form G7. It's kind of like the IRS form 941 that's filed every quarter, but there's some differences, and a lot less information is reported. The amount of taxes that you're going to be withholding depends on a couple things. So you look at the employee's form G4, that's their withholding certificate, so that's similar to the form W4 for Fed. And then you also need to consult the withholding tax tables that we'll find in the employer's withholding guide. Now, it's recommended that all these filings and taxes be paid electronically, certainly much easier. But in some cases you can do the paper forms, and that's an example we're going to look at here. Now, the timing of when you have to make these withholding payments is going to vary. So you have to make the payments to Georgia Department of Revenue depending on how much monthly withholding tax liability you have. And so we'll look at the table which covers these one-day rules, semi-weekly, monthly, quarterly, and annual depositors. So in our fact pattern here, we've got John Q. Taxpayer. He's a sole shareholder employee of Not a Real Company, Inc., which is a Georgia entity taxable as a C Corp. He draws an annual salary of $13,903, and that's paid in equal monthly installments. The total Georgia state withholding that he is going to be claiming is $20 per month, so $60 a quarter. And so because the amount of withholding tax is so low, John's company is going to file the G7 and make payments on a quarterly basis, and that's because the monthly withholding is below $200. All right. Now, the payments could be made on a monthly basis. There's a GA7 payment voucher, but we're just going to be paying with the quarterly return. So if we have a look at this table here, just to see what his withholding and wage numbers look like. So we've got to break it out by month here, but these are the totals in this column. So that's the total gross compensation, and we can see the withholding taxes coming out of John's paycheck are the Social Security taxes and the Medicare, so that's the federal tax. And then we can see a deduction for the Georgia state income taxes, so that's $60 for a quarter or $20 per month, and then we have his federal withholding tax there. So net paychecks at the end of the quarter total up to $3,000. And then down here we've got a summary of the 941 taxes. You can ignore this, right, because we're not doing Form 941 for this video. We're just doing the GA Form 7, G7 that is, and the state income tax withholding that's being reported is $60. So now if we have a look at the employer's guide, so there's a lot of great information here. But what's really important to focus on are the withholding requirements and then when you have to pay. So we're working within this quarterly payer bucket. Now you can also actually work in the annual payer one for this fact pattern, but you notice here that depending on the limits, so the amount of withholding tax that's being applied during the look-back period or on a per-month basis will dictate when the taxes have to be paid. So if you're a quarterly payer, which means your income tax withholding is $200 or less than $200 per month, the taxes have to be paid by the last day of the month following the end of the quarter, and that's made with the G7. All right, and the quarterly G7 is due on or before the last day of the month following the end of the quarter, so same issue. But then there are these, $100,000 one-day payday rules which might apply. So, really important to carefully review all these rules and these schedules. Figure out when it is you need to file, when you need to deposit, because you don't want to be subject to any penalties. Now, the quarterly return, it's just 2 pages, and so the first page is the worksheet. This first page isn't actually submitted to Georgia. It's just used to input the various information, and then when you print this, it will create this voucher on the bottom where you would cut along this line and then send in the voucher with the payment. All right, so what I've done here is we've already entered and printed the return. So you would enter your Georgia withholding ID, your FEIN, so this is the employer ID number, your federal tax ID number, company name, address, contact phone number, and then the tax period that's applying. So we're doing for the first quarter of 2024, so 3/31/2024 is the end. Now the tax that was withheld for the period is the $60 per month, right? So we're doing, per quarter. So $20 per month was withheld for $60 for the quarter. So we've entered $60 for the quarter. We don't have any adjustments to tax, so the total tax due is $60. Now, tax paid on line 15, this is where we would report amounts if we had made payments over the course of the quarter with those vouchers. So if you've already paid funds into the state, you can enter the amount already paid there, and then so the amount enclosed and the net balance due will be the difference that you owe. So in this case, we've got the quarterly return voucher here. So the company name and address is going to be populated in the top right. We have the Georgia withholding ID number, your federal EIN, the period ending March 31st, 2024. The due date is a month later. The tax that was withheld during the period is $60, no adjustments. Total tax due is $60, and the tax that's been paid as of up to this date is still $0, right? Because we haven't actually paid anything. We weren't required to make monthly payments, so that value is $0. The telephone number populated down there, and then this should be signed by an authorized person, and then enter their title and then the date below. Now the amount that's being paid with the voucher is reported down here. So we're paying a full $60 with the voucher. This amount would be different if we had some tax paid. So if we look at a sample voucher here, so this is the voucher, the GAV worksheet vouchers where you would enter your information, and then it would create a voucher where you could make a monthly payment. So if the company elected to make monthly payments, it would use the GAV voucher, but in this case it hasn't. But if there were any payments made, those taxes paid can be reflected in this box here, and then the net amount would be reported there. So let's say he paid $50 in 1 month. He would owe $60 minus $50, and then the amount that should be paid with this voucher would be $10. That's how the math would work. So that covers it for this video. Hope that was helpful. Any questions, feel free to leave a comment below. And as always, I look forward to seeing you on the next one. Thank you.